So my name is Jake Gallagher. This is a short panel on investor acquisition, retention, and client experience. I was recently appointed the director of sales at the firm and looking to build distribution channels, and figured we'd bring on some of the experts and I'll let them introduce themselves.
All right, thanks, Jake. My name is Darius Casti. I'm the president of Fairway America's Capital Markets Group, a principal of Fairway America. And a little bit about the company. We are a commercial real estate investment platform. We help real estate entrepreneurs around the country set up their own funds and syndications. We then have an administration platform. We invest into them out of our funds, and we help them raise capital directly into their deals. So that's a little bit about us. We're in Portland, Oregon.
My name is Matt Garrison. I'm the Chief Operating Officer and Head of Product at RealBlocks. RealBlocks is a blockchain company that allows funds to digitize their assets and basically tokenize interest in the funds and allow investors to not only buy these, but find better and more efficient liquidity in secondary markets.
Hi, I'm Justine McCartan. I work for North Capital, and I am a compliance principal. My main function is to do investor approvals on our clients' deals, as well as work with some of their marketing, doing advertising approval.
So I'm Jeff Andrews. I'm with Lending Club. We're a marketplace lending platform based in San Francisco, public company that's generating in the neighborhood of about $1 billion worth of credits per month, mostly in the unsecured consumer lending space. I help clients both in the United States and around the world who are seeking access to the assets that we generate. And I've also done some work with North Capital trying to help them build some retail-oriented products as well. We are actively trying on a regular basis both to distribute our lending product out to a broad swath of American borrowers and also distribute the ability to access that from an investing point of view to both institutional and retail investors. So hopefully I can talk to both of those in your panel, Jake.
Grace Chen, I'm the co-founder of Nation Global. A little bit of our company. Nation Global was founded in 2015, and we're a technology platform where we give global asset managers, mainly private asset class asset managers, access to like wealth managers in China. We've so far aggregated around 200 million USD of offshore retail high net worth clients capital and invest into various of like private funds, including private equity, hedge fund, real estate private REITs, pre-IPO shares for the tech companies. We currently have offices in New York, Hong Kong, and throughout mainland China.
All right, so we'll start off with the first topic. I guess, what are 1 to 2 ways that you guys and your firm go above and beyond to provide the highest level of client experience?
We start with me.
We'll go with you, Dan.
Since I'm first. For client experience, I pride ourselves on communicating well with the investors, communicating frequently. There's always room for improvement on that, but that's something that we've worked hard to do. So we send out frequent, very transparent communications as to what's going on with the investments. And then, performing well as far as the investments and the returns. And, some of our funds are set up for monthly distributions, so hitting them with monthly checks helps. So that's a little bit of that.
And then with the client transparency, how does that affect your client retention?
Well, I think it helps us gain trust of the investors. I mean, we're even transparent before they make an investment. A lot of times we'll show them all of our due diligence, anything they want to dig into, the financials of the fund, or if they are coming into the fund, or the upfront due diligence on the syndication deals that we do, so they can review the appraisals, the loan documents, any other bits of the DD that we do, so they're able to kind of underwrite the deal alongside of us if they so choose. Most of them kind of take our word for it after a while, after they kind of spot check it, but that's what we do on transparency.
Awesome. And Jeff, you kind of mentioned it earlier with the institutional and the retail side. What are a couple ways that you kind of interact and try to provide the best experience?
Yeah, the concept of Lending Club as a marketplace lender really is just that, right? To create a marketplace between borrowers and lenders. So On the borrower side, we've really expanded mobile tremendously. Our mobile customer acquisition has grown tremendously. On the borrower side, our acquisition channels are everywhere. We actually just had our first national TV ad, all the way to the most basic direct mail. So our customer acquisition channel is large, and the key there is that once the borrower enters the funnel, is to provide them as sort of as fast and as efficient of an experience as we can in the underwriting process, because people are very used to when they're getting a loan of it being something that's very manual and you have to deliver a lot of documents, and it can be a real pain in the butt. And so we've tried to automate that as much as we can and only ask for documents when we need them and try to make it as real time and fast as possible. So that's sort of the way we improve the UX on the borrower side. And on the investor side, we just continue to innovate new products. So much in the same way that North Capital is trying to create a product for the retail advisor, we've been facilitating partnerships with asset managers who are building fund products around our asset. We've built new products geared more towards the institutional marketplace. We've undertaken a pretty consistent and conforming securitization effort so that we can present bonds to the marketplace on a regular basis. So for us, the investor side is really all about just creating more and more points of access so that people can get access to consumer loans. It's really an asset class that retail and institutional have not really had access to until the last decade.
Okay, so since in your particular field, this is kind of a newer side. I know it's a new way of creating lending to an old-fashioned sector. How does that happen? How does that help with your client retention?
We've had over 30% of our borrowers have come back to us a second time. Clearly that indicates that they've enjoyed the experience, and chances are that for us, they're a good borrower, right? We're not going to underwrite someone a second time if they're not a good borrower. So the key for us, again, is just efficiency, it's ease of use, and it's speed. And so the consumer lending marketplace really has been owned by credit card companies for the last 40 or 50 years, and all we've done is sort of repackage the old personal loan that used to take place at community banks, and we've given access to that both to the American consumer who's looking to borrow money at a better rate, but also to the investor who's saying, I can actually access 3 and 5 year paper in a way that I've never been able to touch before. So it provides a pretty compelling rate of return, especially for the given duration of the assets. So, I think we keep people coming back because of the fact that it checks those boxes for them of, the rate is better, the ease of use is high, and we're really efficient in our underwriting process.
Fantastic. And Grace, what are your thoughts on it?
So regarding our user, we have 2 type of user base because we're interacting directly with wealth managers, which I think is similar to IRAs, like RIAs here, and then they are interacting with the end users. So we have 2 portals on our system. We have the wealth manager portal, and then we have the investor end portal. So to eliminate, one of the challenges initially is the wealth manager would think, are you a retail platform or you're a 2B platform? You can't build competitions, then the investor will just directly come to us. So to eliminate that, our investors portal can only check the after investment status and check the reporting and everything, and they can show redemption of the investment and also decide if they want to continue reinvest and select other product, but they can directly on board with the platform. So that was one side, and the other side, for the wealth managers, I think there's 2 things for them that's really important because in China it's a complete different market. They are new to all the investment, kind of asset class, and then they don't know anything of offshore, if it's safe, secure, if there's regulation. So we emphasize 2 main processes. One is training to assuming those independent wealth managers, they have no idea about what the global asset classes are, what the regulation, how to invest, how to demonstrate to their investors. So we do host online class through the direct broadcasting and video recording through asset managers. And then we also arrange different variety of offline road shows to visit our advisors invite those like advisors to our office and then get training as kind of like you're the salesperson or insurance agent. You have to get like certain class certificate and go through all the process to be a certified, wealth advisor on our platform. And then the second, I think, is after investments like service. So if they have any question, we have a business development team and like client service team to answer all the after post-investment questions for the wealth advisors, and they can report to their clients. And also the I think this like kind of payment settlement system. So every month we would settle all the sales commission directly with all the advisors in China. So we essentially aggregating investor information, but using the intermediary of those wealth managers, then they get paid from the platform as well. And for the user, I think the end investor, and we also have a mobile app, which, both has a mobile app and also the desktop version, but the investors also getting a WeChat building app where they can access through the #1 Chinese messaging app. They could just directly click in, use their mobile to log in and check any investment status from the mobile end.
Perfect. And you said that you guys had raised some $200 million. Was that, or have you noticed one investor investing in multiple deals, or is it, how has that been?
So we've, I would say like retention rate after, so we started fundraising around 2016. So now it's been 2 years. And some of the fastest, shortest like duration of our investment around like a year. So I would say like more than, I think 70% of the user would just continue investing unless they have, 30% might be switching to another product, and then they might be just need their cash. So our retention rate has been really up, like it's been pretty high. But like in 2016, it was only, each month we only, raise around, I would say like 2 million, but now it's been like 20 to 30 million. So it's been growing a lot.
Perfect. And so Matt, with RealBlocks, it's a pretty unique, subset. What's your typical client profile?
Yeah, so we have two typical client profiles. I think one is your kind of international investor that wants to be able to deploy their money effective ways, like especially in the US, but is either frustrated by the traditional process of like the complexities around it, or just like, could be a cryptocurrency that they want to move into a more stable asset class. And then the other is a traditional kind of like real estate investor that's looking to potentially get better liquidity out of traditionally illiquid investments, which is what our platform helps them to do.
Perfect. And so how have you been engaging prospects and investors?
Yeah, so it's obviously a bit nuanced. Trying to ask for, rich people doesn't return great results. What we've been doing is trying to develop networks of people that could be through RIAs, through family offices. But basically, we want to go to the market and explain our story of like, we're not just some blockchain company trying to do an ICO. What we're actually trying to do is redefine the way that real estate investments are both created and traded in the secondary market. So we really try to put that story forward and to create kind of like a network worldwide where people can understand that and like, through the understanding, be comfortable with like the new technology, because it's honestly one of the hardest parts about blockchain companies is making people feel that it's real and it's safe and it works.
That's perfect. And so, Jeff, so what would you say that are, your top ways of engaging with prospects? I know you have a wide array of different prospects, whether it's asset managers, individuals. I know.
Yeah, I guess, look, at its base, it's still a relationship business. So, we're out there all the time. We just had a crew dealing with the institutional side, down at the Asset Back Conference in Miami, and it's still just getting out there and seeing people face to face. I'm in New York every quarter, and we're just constantly engaging with people. I would say something that's been really key on the institutional side of the business has just been walking into people's office and saying, "What do you need?" And I had an asset manager look at me recently and say, "God, no one's ever actually asked me that." And so, just saying, how do you want to engage with the asset? What product do we need to build for you to touch this? And they found that to be really unique. On the retail side, we have a dedicated team of people who are there to be engaged with, just literally by on the telephone. And the website experience is really intuitive and it's pretty easy, but it only takes you so far, right? So we've got an entire team of people who engage with now what is almost 150,000 retail investors on the site, who are actively investing in loans on a regular basis. And as easy as you can make it to interact through desktop or mobile experience, it still helps to have the people on the other end of the line. So I think for us, even though it's a fintech company, and even though we take a lot of pride in the tech side, the personal touch is still unbeatable.
Perfect. And what have you guys done to expand internationally?
We've mostly been reactive internationally. We haven't expanded the loan platform at all, and there's really no plans to do so. The capital side has been expanding internationally. You'll know from compliance that it can be a bit of a challenge, and so I would say deliberately and really carefully. But but there has been international capital that again is seeking the same thing from a yield perspective, higher yielding, shorter duration assets. So so we're out there. Actually, I was just in Shanghai and Singapore a couple weeks ago, talking with people there about how we might be able to engage. So international is really attractive to us, but we're also pretty conservative.
Perfect. And you kind of touched on it on the compliance side. Justine, is there anything that you could recommend that would make it easier on the compliance side as you try to expand your investor base internationally?
Internationally, basically we need exactly the same information as we need on any U.S. investor. And it's basically the same for us in reviewing. We're just reviewing the same information, same as a social security number. But I know some of the documentation is a bit challenging when it's in a foreign language. So that's, I think, definitely a challenge if they're investing with an LLC, a trust, a corporation. That's challenging on our end because we don't have the bandwidth to read those documents. But that's the main challenge there.
And Grace, I know you have a big base internationally, and you're targeting advisors. Are you also targeting individual investors as well, or is it just advisors? And
so there's a story of how we did our business development. So actually, I would say our clients are 98%, maybe 99% international, like all Chinese. Mm-hmm. There's no local business, because that's why we just engaged with North Capital of local business. That's our next step, to expand to the North America high net worth Chinese, and also some of the, I would say like Canada, Vancouver side of like high net worth. So our past all investors were based in China or in Hong Kong or like other like countries, but they, whoever has money offshore with bank account offshore. So we wanted to like directly reach out to individual investors, but we realized in 2016 the market wasn't mature enough for the retail investor to actually directly trust you to give money to offshore, like whatever manager or asset classes. So we targeted reaching out to all the wealth manager who has a lot of clientele that they are already managing, and they kind of have financial foundation to understand the asset classes. We just need to incentivize them to sell for us. So that's why we had a pivot, and essentially we changed after 3-4 months of marketing tests, and then we decide our market is going to be 2B. But now, since the 2B market is pretty much we're, I think, the biggest asset allocation company in China for retails. So we built we educate the market, we build a network. That's enough. We don't need to focus that much on that market anymore. So we're actually building a small, like a second brand that would be directly giving access to the investor end, direct investor end. And that would be starting from the US and Canada market.
Okay, perfect. And so a little switch to technology and how this is involved in client accessibility. I think we've kind of touched on it a little bit. Matt, would you like to explain a little bit on RealBlocks and exactly how that increases client accessibility?
Yeah, so I think the important part with the technology is to understand, like, especially with blockchain companies, it's easy to get away from like the fact that you're actually trying to serve a purpose with the technology instead of building something cool. We've really focused on like trying to understand like what our end users, kind of goal is. And for an investor, that's like to get a return on your capital and to be able to easily deploy that or allocate it to other resources. So we've taken like that approach in using the blockchain technology as a vehicle that we think can most effectively do that through like issuing like tokens through it, through trading compliance, and also through discovery of like, peer-to-peer trades in secondary markets. So.
Perfect. And let's see, Darius, I know you guys are developing your technology platform and the market technologies. Would you like to expand on that?
Sure. So, Marco Technologies, and Lance will speak to it on another panel, but is really designed to take some of the pain points away from real estate fund managers like ourselves, as far as the onboarding process of investors, the filling out of subscription documents, KYC, AML, accreditation, and then having access to an ongoing investor portal that can not only be more transparency for the investor to be able to log in and see, but also ties right into our administration platform to do all the calculations and distributions and things of that nature. So that's what Marco is all about.
And Justine, how could we use technology from a compliance standpoint to increase transparency or improve client retention?
With our Transact API platform, KYC, AML, all automated, documents can flow right through, and it's really seamless if it's flowing through our technology for the client. And Darius, you use our technology, and
So Marco is tied in with Transact API.
Exactly. So the information flows in, and from our end, when myself and Sean, when we review the information, it's all right there in a neat bundle for us. So it's super easy to review investors for a close and have all the information right there, all the documents, accred letters, AML, KYC, and all the investor information in one spot.
Perfect. And since we kind of all have different sectors of expertise, I'd like to know what investing trends we've, each and every one of you have seen, just because, across the wide range. Grace, what have you seen?
Investors' profile?
And trends, are they fleeing from one sector to another, or maybe just trends in the investment?
Their preference of the sector of investment?
Mm-hmm.
Yeah, so I would say when we started in 2016, most of our investors are very conservative. So they've invested starting with fixed income, like private debt sector, which is more liquid, to see if the platform can actually perform and redeem and give them the return that they want. After we've built enough user base and there's more trust and more publicity in China, then I think we've seen trending for the entire end 2016 to early 2018. Our biggest sector that's been raising money is the pre-IPO tech shares. This is actually, I think, accounts for now maybe 60% of our volume. It's been performing really well. The investor is actually getting exited this year for like 30 to 40%, like in half a year and stuff. And the other part that's very popular is we have a product, industrial REITs, which provides annual liquidity. So good liquidity, decent cash like income, and decent appreciation on the asset class. So those are I think, the ones I've seen are gaining the most attraction from our Chinese investors.
Okay, and I know you had mentioned it earlier that your typical investment period is 1 to 2 years. Is there a reason that you chose 1 to 2 years versus 3, 4?
No, we have products. So real estate, usually we have some real estate private equity fund that's around 3 to 5 years. Our REITs are annual liquidity. Our private funds, like private debt funds, are like monthly liquidity. We also have a life settlement fund, which is a very good strategy for alternatives. It's an open-ended fund. It's around 2 year and 2 year lockup with quarterly liquidity. So our product varies, but the best ones sales are the 2 year to 3 year ones. Yeah.
In Darius, with the small balance real estate, what trends are you seeing in that? Or is it commercial, multifamily?
Well, we're seeing different trends in different asset classes, of course. Multifamily is different. Markets are a little overvalued at the moment, so we're seeing a shift away from that.
Is there any particular market that you find attractive?
We're kind of agnostic to markets. We're more looking for different opportunities with the right sponsors. We're seeing a lot of opportunity in what I'd call distressed retail. So some of these big boxes that are going vacant and not really having another purpose other than trying to find another tenant. So we've been working with some sponsors that are repurposing those into self-storage. Some other guys are looking at doing multifamily out of these big box retails that have gone vacant. And then just generally, a lot of the publicly traded REITs are selling those assets off at pretty good discounts to what is kind of normal. So we're able to get those at pretty high cap rates and they're cash flowing. And so we're doing quite a bit in that space right now. Lending is difficult right now just because there's so much capital going after hard money loans. So that's driven yields down and advance rates up. So the returns are low for the risk, in our opinion. So that's some of the market shifts that are going on.
And with the consumer lending, is there any trends that you're seeing there, Jeff?
I mean, I think there is fear on when this macroeconomic trend is going to turn, and it has to turn at some point, and we're 10 years into an expansion, and so people are definitely looking at fixed income assets. I think the initial trick for us as a company was to get people to stop thinking of consumer credit as an alternative asset class and instead think of it as a fixed income alternative. And I think we have been successful in doing that. People now are starting to view this as just yet another class of fixed income, which really is exactly what it is. And banks, the large credit card issuing banks, have been utilizing credit card issuance and those revolving balances to great benefit for their own P&Ls for years. And so now we've just sort of opened up the marketplace, and along with a lot of other competitors who've entered the space as well, are just giving people access to these fixed income instruments. So the interest remains high, especially as people wonder how close we're getting to the end of this economic expansion, and people are saying, maybe I should be in something that has a short duration, maybe I should be in something that can be sensitive to a rising rate environment, and maybe I don't need quite as much risk-on exposure. So, I would say that's where the interest for us is coming from.
And that's your typical maturities are 3 years or less?
Well, so all the loans that we make are 3 and 5 year duration. If you add in if you add in prepayment and defaults into the equation, a mixed portfolio of 3 and 5 year paper is going to end up with a 1.7, 1.8 year fixed income duration. If you concentrate only on the 3 year, it's 1.2, 1.3 years. So it's pretty short duration paper. If you stack it up against other comparable less than 2 year type of fixed income instruments, it looks really favorable.
Okay, and so you guys do it on base of credit scores and a multitude of other factors. Have you seen one sector, borrowing more than the other?
I'd say that, we've just seen, along with everybody else, there's just been a vast expansion in the amount of credit available to your average American. Mm-hmm. So I always tell people who are wondering about our asset, when was the last time you got a credit card solicitation in the mail, or when was the last time your kid got a credit card solicitation in the mail? They come in all the time, and now people are starting to see more solicitations from groups like Lending Club or Prosper or SoFi or Marcus. So there's a vast expansion in the availability of credit, and unfortunately that creates the only logical outcome, which is that some people overexpand their own credit. And so that's what we try to be careful of, and that's what the underwriting is intended to look at. So yeah, it goes way beyond FICO score. I would say generation 1 of the underwriting 10 years ago was, what's your FICO? And now in our 5th generation underwriting model that's constantly being iterated, it's taking into account thousands of factors that both sit within a credit report, but that sit within somebody's entire footprint that they create, sort of in their spending history. And we're doing things now that are pretty obvious in some ways, but we'll offer someone a better rate, as an example, if they give us their Plaid login information. So in other words, Plaid is something that allows us to see their bank account, see their underlying cash flows, and we know a lot better than when they're getting paid, how they're getting paid, and how their cash flows are working, and we'll do a lot better job underwriting if we can see that information. So we're using alternative data sources we've gone far beyond FICO.
Okay.
Somebody might get a better rate if they bring on a second borrower and there's a joint application, or if they're willing to let us pay off their credit card debt directly. Balance transfer is a big program for us. So instead of them getting the cash and relying upon them to pay the credit card, we'll pay the credit card company directly and they can get a better rate that way. So those are some of the things that we're doing to try to both enhance credit, bring in alternative sources of data to credit, and really expand way beyond FICO.
Perfect. And so, Darius, what would you say is the number one pitfall when you're engaging a prospect or an investor? What's the one thing that you see that you trip up on? Maybe not trip up on, but the biggest objection.
I think that we have a finite number of products, right? And so it's like our funds are open-ended, they're not closed-ended. That doesn't work for some. They're income-oriented, they're not necessarily growth-oriented. So that's something that we get some pushback on occasionally.
Okay, so you would say he's only an equity investor, he doesn't want any part of our debt, or
sure.
vice versa?
So we're exploring other product types in order to figure out or meet in the market where it is. And I think in the market cycle that we're in and where we're at in the market cycle, I think there's been a shift toward more of the fixed income type of stuff. And as you know, we have a fixed income product associated with our funds, and that is starting to raise capital better than it has historically because there's a shift towards safety.
Okay. And Justin, what would you say, as doing the investor approvals, what would you say is the number one pitfall that you see that any loss of clients or loss of investors?
Not getting the correct information upfront from the investor. I think a lot more investors now are investing with trusts, LLCs, and corporations, and we're seeing a lot. They don't want to give us the information or give us the operating agreement or the articles of incorporation or the trust documents. So getting that information up front, I think, is key. So by the time the investor approvals do come to North Capital, that we have everything that we need so we can go ahead, approve, and move on and get the deal. So you don't have an investor pulling out when they're in the middle of trying to do a closing in a deal because we're missing some information.
Perfect. And so I guess this is a little final question for everyone. As we move forward in this fast-paced technological world, where do you see your individual sector going? The biggest trend heading forward when it comes to addressing client wants and client desires?
I think just more communication, faster communications, transparencies on it. I think there's a lot of effort toward turning real estate investments into more of a liquid asset than it has been historically. We'll see if blockchain and crypto and tokens can pull that off, but that's where I think technology can help.
And when you said communications, is it what types of communications are you sending?
Well, it's just that people are more accustomed to shorter, faster, more frequent communications given the social media and text messaging and the way that people communicate now, as opposed to, I think about just take 5 years ago, 2013, when we launched Fund 6, we were mailing out our investor statements, mailing our letters, mailing the FedExing sub-documents around and hoping they came back correctly, which they never did, then you FedEx them again. So, already just in the last 5 years with the Marco technology just expediting and making it way more efficient to onboard people, there's that. Now all of our statements are online, all of our investor letters are, here's a link to click. I'm communicating a lot more with our investors by text message because that's how they prefer to do it, because they're on the golf course or hanging out with their grandkids or whatever. So, that's a big part of the change that we've been witnessing already, and I think that trend just continues.
Perfect. And Matt, with the RealBlocks, where do you see that?
Yeah, so I think 5 to 10 years, you can already see the trend that self-directed investments are on the rise. I think that's going to continue. And I think, importantly for the crypto area, we're going to start seeing more sophisticated investors. I mean, I think you're going to start seeing more kind of desire, less so for an advisor that kind of like allocates your portfolio and does that for you, but more so of like, hey, I want to invest in this kind of area, or I want to invest in this kind of like theme. How can you help do that? And I think like the kind of precision and the ability to like chop up things and like represent them as tokens is one way that that's going to kind of dramatically alter the way that individuals kind of interact with their investment advisors and institutional clients as well.
A way to step away from the cookie cutter aspect, so to speak.
Exactly, yeah.
Perfect. Interesting. So where do you see this in the next 5 to 10 years?
Well, I've already seen a huge leap from just a compliance point of view where technology, like Darius was saying, with, before subscription documents, you had to mail them, get that wedding signature. The more and more we automate the process, the faster, quicker that an investor is invested and the money flows. So I see that more and more coming down the pike with technology that is going to be more and more automated and a more simplified process for the end user.
And the more transparency, the more the investor's going to be comfortable.
Exactly, and I think it's become a lot quicker. It's days now versus weeks, and I see that becoming the time frames getting shorter and shorter as the technology is built out and as more platforms are built out to get the information for compliance to approve, and it's more seamless to the investor than it ever was. When I started in this industry, we were writing tickets. Everything was paper and pen, and where we're at today is phenomenal. I think that's going to continue to grow and grow.
And Jeff, I know Lending Club is, that was an opaque industry. Now, we've made a technology with the technology. Could you expand on that?
Yeah, I mean, I think, again, to talk about both sides of our business, I think on the borrower side, technology has been instrumental in us creating industry-leading lack of fraud, issuance of loans. That we issue 1 to 2 basis points of our loans are issued to identity theft situations. So, and that's totally and 100% a result of technology, and the engine only gets better every day. Same thing with underwriting. I've already talked about it a little bit, all the alternative data that we're bringing in and how that continues to enhance the process. We're certainly, aware sort of the broader trends in terms of what's happening with advisory fees going down, and with, I think, as you referenced, we're starting to see a lot more bespoke terms of asset allocation and where people want to be. Mobile interaction is a gigantic portion of what we're doing, both sides of the business, and hopefully we'll continue to innovate and maybe even get to the point where at some point we're looking at some of the innovations around tokenization and blockchain. So certainly of interest to us. Again, we're conservative and we'll probably go slow for what's supposed to be a fast-moving industry, but it's really exciting what's happening.
And your final thoughts?
Yeah, so I think there's 2 trends that we're seeing actually since the way we've been growing. So one is, first we started giving access to retail high net worths, the primary market access, and then we're seeing a trend which is something that we're developing is the secondary market for the primary trading platform, and also the margin market for the primary, which is what's essentially the stock market is providing, but lack for the primary, which is why retails are not investing in the past, and institutions were the primary source of capital. And I think this is going to change in the next 1 or 2 years coming. The other, I think, is very what we're experiencing is we could use technology and the platform to change the way how the millennials and other global kind of cross-border how wealth management can be done without the client flying to Hong Kong, Singapore, coming to the US, go to a private banker and say, okay, what am I going to do without the language, with all the language barrier, understanding barrier, so we can use that all through timeless technology and also just on-site broadcasting. And that's something we're enhancing our user experience as well.
Fantastic. Well, I believe that concludes our session of investor acquisition and retention. Thank you very much.